Thank you for your interest. Hats off to Marco and his team for setting up and running a fantastic company conference. We are neighbors in Switzerland, and I thank him for his invitation to finally see his work life in action. Before I run you through what we do, let me spend a few thoughts on emotions. Emotions are part of everyday lives, business as well as personal. For me, up here on stage is different as for you down there. You're relaxed and calm, sipping a coffee. Am I performing better up here in front of all of you, or would I be better in a small meeting room? And the same is true for financial traders. If you're up with your performance, let's say $100 million, that's good for you. It might make you better. It might make you overconfident, make different decisions. If you're down, it might mess with your head even more. In the end, the question is, how do you handle emotions? Now, if I were doing a little experiment and ask one of you to do this calculation in your head right now, in front of everybody, would you be better at that? I'm not going to make you do it, but I see that some of you already thought, I hope he's not going to ask me. I actually saw one running out. But you get my point. Now, I don't want to spend much time on this, but it's really just to show what research estimates revenues will be in algorithmic trading strategy improvements. That's not the management of it, it's just the improvement. I think ranking that second is already a big thing. To show you what systematic strategies can do versus humans, take a look at that yellow line, which is a systematic program which has been running since the 90s, already very successful, has turned its owners into billionaires. My previous bosses, by the way. Particularly impressive is the outperformance versus the gray line underneath. That's the S&P 500. And especially impressive is the outperformance during the negative years for the S&P. Now, the annual return of 6% for the S&P might surprise some of you, given that this is over 20 years. It might be even less than that, because the average investor is suffering from emotions. They tend to sell at the bottom and buy at the peak, which makes that 6% probably closer to 5 or 4%. Now, learning curves of investors are not straight lines. Right? Everyone out there, or most of people out there, are not using systematic tools to decide on their asset allocation. They do that via emotions. They are often overconfident, believing in what they selected is best. The issue with that is there isn't winners out there often enough, because the people who make those decisions wrongly are not managing their own money. They're managing yours. They're managing pension fund money. So they screw that up quite often. Robo-advisors, I'd say, are not the solution either. The general idea is good, having a systematic asset allocation in place. But the ingredients are not right, are not good enough. And most robos don't shine with performance, they shine with a good website and low fees. But there needs to be more than low fees, because in the end, I can't go shopping for 50 basis points in savings on a 50% loss. It doesn't make a difference. Now, we are an emerging manager in this field. And until recently, the large allocators only wanted to invest into the big businesses out there. And those big funds have not performed as well over the last 5, 7, 8 years. So the attention is shifting to smaller managers like us. Even the most conservative investors, like the Sovereign Wealth Fund of Australia, is investing $36 billion in seed money into emerging managers alone, making that a core initiative of the fund. This is a slide which shows you the profitability of quant trading firms. Now, it used to be topped by Apple. And when I added quant firms to it, that picture changed. Vinva, as the top on this list, is a business which hardly anyone knows. They raised $15 billion in 2.5 years and have been closed to new investors ever since. Now, what do you need to run a successful quant business like that, to be on this page, the previous page I just showed you? I think it starts with a setup in terms of offering. How many strategies do you have? What do these strategies do? We have built a diversified set of investment strategies over the years. They all do things differently. They profit from different opportunities. And they also address weaknesses of the other strategies via their own strengths. But it's not offering alone which makes that a successful business. It's in the end also very much about performance. And here I show you a list of equity indices as well as single equities, which is a tough benchmark to beat. And I compare that against our oldest, longest standing systematic strategy, which we call systematic intelligence, SI. And while you go through the numbers, don't go through all of them, maybe focus on the bottom. I'll just say that the first few years have been backtested. Investors want to see backtests on the strategies to see especially how would have that done in 2008, the last financial crisis. We usually discount backtests by about 50%. But even if you discount it by 50, I think you're still looking at quite a good year in 2008. Now this is just taken the winner from the previous page and compares that against SI, but only the live performance now. As you can see, we still come out ahead, and that's risk adjusted to effectively compare apples to apples. Now, the good thing is that SI isn't our best performer. Swarm is. That's our machine learning strategy, highly active in financial markets, using quarter-of-a-second price data to generate thousands of trades every month. People say that having a 3-year live track record in a machine learning strategy is a fantastic thing to have, because many other market participants only joined recently. Performance, strategy, diversification are 2 necessary ingredients. The entire infrastructure on which you build all this is key as well. It's about regulation, about research dedication, infrastructure, team, trading efficiency. Too many things to go into in a 10-minute presentation, and also not enough time to go into the planned merger, which we're currently going through to address those issues as well with a $6 billion business. These are a number of awards, or the awards that we have won since 2016. I hope that there will be more going forward, but I'm happy that this page is already full. Now, eventually, you also need to sell all this. And we do this via another business of mine called Green Shoots Capital. And at Green Shoots, we sell, market, structure, brand, communicate. We do that via external companies too, which is about 35 of them at the moment, giving us access to roughly 120 different strategies. And it helps us to see what sells, to whom, when, where, and how. Now, my outlook is not as rosy. I know NOAH is all about the good, the best, and the biggest disruption. I think the biggest disruption to come is most likely the next financial crisis. Who knows when? So maybe do your VC funds a favor and consider something that has the potential to do well when things get messy, when things get emotional. Thank you very much.
Thank you very much for your presentation.